I now call the Chairman of the Treasury Select Committee, Mel Stride.
Thank you, Madam Deputy Speaker. And may I rise to broadly welcome this budget. It is the first budget that my right honourable friend has delivered in what we might call the second phase of this crisis, the first having been from the sharp contraction in the size of the economy through to the recovery, during which period my right honourable friend, I think it's fair to say, did some...
One moment, the honourable gentleman, just one moment. It's too noisy down here now. It's not fair. The honourable gentleman has to be heard too. Mel Stride.
Thank you. I was just saying, Madam Deputy Speaker, that in the first phase of this crisis, between the huge contraction in the size of the economy to the recovery that we're now seeing, I think it's fair to say that my right honourable friend did a pretty remarkable job to support the jobs market and to support jobs. Not without criticism, incidentally, from my committee, but overall a remarkable job. He now has an even tougher job as he looks forward to the future, having to now deliver on sustainable economic growth, making sure that the public finances are on a sustainable trajectory, as well as meeting all those other objectives the government rightly has around levelling up and net zero and so on. I'll give him way briefly to my honourable friend.
I thank my welcome friend for giving way, and he mentioned levelling up. And would he not agree that this is a real workers' budget, and actually the funds for skills and schools will transform the prospects of our young people and our adults and let them climb the ladder of opportunity to get skill, security, prosperity and jobs for the future?
I think my honourable friend is absolutely right about skills, and he, of course, through his committee has done so much to promote that agenda, and I will come on to that momentarily. But the background, Madam Deputy Speaker, is extremely tough. Whilst the Chancellor is absolutely right to point out that the deficit is falling, it is nonetheless very highly elevated compared to historic measures. The debt, in financial terms at least, is at a record level of £2.2 billion, and we have the headwinds to the economy of supply chain bottlenecks and the mismatch between demand and supply that we are seeing in parts of the labour force. However, there are reasons to be cheerful, Madam Deputy Speaker. They have been outlined by my right honourable friend, and they are the OBR's revised forecast showing that growth is much stronger this year. I think the Chancellor suggested 6.5 compared to the March forecast of just 4%, and the scarring downgrade from 3% to 2%, which by my calculation is probably worth about 10 billion or thereabouts per year, is a very significant achievement, and all of that has been achieved through the hard work of the last 18 months to 2 years, and I don't think we should take that away from my right honourable friend. It has left him with some breathing space, and he recognises that there are many challenges facing the economy and uncertainties going forward, and I think a big test as we unpack this budget will be what has he done with that additional headroom. And not surprisingly, he has spent quite a lot of it. It appears to me that with his fiscal rules of keeping day-to-day expenditure without borrowing and debt coming down as a percentage of GDP, that I think he has a headroom of about 25 billion in 2024-25 on the net debt target, which is about 0.9% of GDP, with the OBR, I think, in its economic and fiscal outlook, suggesting he has a 55 to 60% chance of hitting that particular metric. What the committee will want to look at very closely is how prudent an approach has my right honourable friend taken to this budget, and I can see my honourable friend itching to intervene, so I will give way to him.
Very briefly, and I am listening intently, but I do believe that the government has done extraordinarily well in raising the national living wage as part of that headroom. It is a major step towards a high-wage, high-tech economy, and also bolsters our one nation agenda, which is to be applauded.
I think my honourable friend is absolutely right. I will come to the matter of wages and wage growth momentarily, but just dwelling on this issue of the challenges facing the economy going forward, another thing that the OBR points out is the increased sensitivity, and the Chancellor in fact made this point, to interest rate rises and the damage that it can do to the public finances. And I think my right honourable friend gave the example of a 1% rise leading to £23 billion increase in debt servicing costs. Now, to put that into perspective, Madam Deputy Speaker, that would wipe out the entire value of the corporation tax increases and the threshold freezes for income tax that my right honourable friend announced at the last budget. That would be gone in one enormous gulp. So we do have to be very careful about this vulnerability we have. Though we have low interest rates and interest rates might move up in baby steps, it is applied to a very, very large level of debt indeed. And I wanted to just touch on inflation, and I'm pleased that my right honourable friend spent quite a lot of time on this in his speech, and its impact on interest rates. We've already seen the MPC beginning to divide on the issue as to whether rates should go up, and there's an expectation now, certainly in the markets, that rates will start to increase. We're seeing 10-year gilts coming up in more recent times, and it's possible that QE, maybe passively initially, may start to unwind when we reach a certain trigger level of interest rates as well. So it's very important that this credible plan is there to deliver on those fiscal targets. And the history, Madam Deputy Speaker, is not good in that respect. We have had Chancellor after Chancellor that have failed to meet their fiscal targets. They've either abandoned them completely or delayed them or modified them in some form. And whilst it may be the case, depending on what happens to demand in the economy relative to supply going forward, that there may be a case for fiscal stimulus even further down the line, and one thinks of the removal of the UC uplist, the energy price increases, the labour market demand-supply mismatches and the rising taxes, etc., are often taking demand out of the economy. Nonetheless, that set to one side, the default position of the Chancellor must be to stick to those targets and to resist the huge cacophony of demands that there will be going forward for more and more expenditure, particularly that day-to-day expenditure that he is rightly targeting in his fiscal rules. Now, some of these demands may end up being necessary. If we don't get back to the kind of pattern of demand for public transport that we had before we locked down, it is conceivable that further subsidy will need to go into the public transport sector. There will be other areas, like the health service, that may have additional demands. But I would point out to my right honourable friend, and I know he more than most knows this, that the take of public expenditure taken by the NHS has risen in the last 10 years from 32% to 42% over that period. So he must get very good at saying no to ministers when it's necessary to do so, and to tell them to go back to their departments and work harder at getting more out of what they're given. A lesson for all of us, incidentally, Madam Deputy Speaker, particularly on this side of the House. And if we fail in this endeavour, Madam Deputy Speaker, and inflation takes off and interest rates go up through the roof, and the cost of servicing our debt becomes ruinous, and international markets lose faith in our economy, we will be back broadly where we were in 1992 when we had Black Wednesday. And members on this side of the House will remember the long, hard lesson of that it took us a generation to re-establish our ability to be able to look the electorate in the eye and say we have fiscally a responsible government. There were some announcements on tax, and can I firstly say that I think the drop in the surcharge on the bank surcharge is absolutely the right thing to do. When you're putting corporation tax rates up to 25% from 19%, it would be absurd to cripple our financial institutions with uncompetitive international tax rates. But I was particularly delighted by the shift in the taper rate from 63% to 55%. That is going to help countless low-paid families earn more, keep more of their money, and encourage more people into work. And I remember when I was a Minister at the Treasury, Madam Deputy Speaker, we endlessly looked, and I pushed really hard on this, and I know how expensive, and I think it was £2 billion a year that my right honourable friend suggested, it is to do that. And I take my hat off to him for having grasped that particular nettle. He is right also to set out an aspiration of getting taxes down before the end of this Parliament. It is the same pattern actually as occurred under Lady Thatcher, and there are many references to her when we talk about tax. In the early years of the Thatcher government, the tax burden rose quite strongly, and it was then my right honourable friend's hero, I think, Lord Lawson, who was able to bring those tax rates down. And let's hope that my right honourable friend is in a position to emulate that in due course. Can I just turn briefly to inflation, because I think this is right at the core of what is happening now within the economy. The threat to the public finances through inflation cannot be understated. The big debate now is whether these price surges and increases in inflationary expectations are transitory or they are going to be more persistent. And my right honourable friend referred to the surge in demand relative to supply. And of course, that will lead to price increases. And of course, all else being equal, one might imagine that will pass through relatively quickly. And we've seen commodity price increases, transport price increases, and the energy price increases that my right honourable friend specifically referred to. But there are a number of other price increases that we might expect to be more sticky. The bottlenecks, which are often outside of our control. The Southeast Asian chip manufacturer who has a bottleneck and resulting in us not being able to produce cars here in the United Kingdom. The fact that structurally the labour market has changed. There's a greater demand now for goods relative to services as a consequence of the pandemic, and that will take time to mop up. The Bank of England, the MPC, have expressed increasing concerns in different ways about inflation and have constantly been deferring the moment at which they believe inflation will peak. And I think there is a debate, Madam Deputy Speaker, as to when deferred transitory becomes persistent. But the big, can I just finish this point? The huge challenge here and danger is that we go into a wage price spiral. And one of the ways that might happen is if we talk up wages, if we invoke companies to put up wages without a coincident increase in productivity, that will simply feed the inflationary tiger. And we have to be very careful on that point. I give way to the honourable gentleman.
Well, would my right honourable friend agree we need to be very careful about believing any of these OBR and Bank of England forecasts? Because they, of course, said that inflation would be down at under 2% just a few months ago, and they've now had to change their mind. And wouldn't you also agree that when Lord Lawson did cut income tax rates, we had a surge of extra revenue?
It's certainly the case that the Bank of England's projections on inflation have been under debate, and in fact the revisions that they've made in more recent times have been more dramatic than those if you go back in time, and that really illustrates my point that I have a feeling that these inflationary pressures are going to be rather more than many imagine them. But if we look at the drivers of inflation, there are some that are outside of my right honourable friend's control, but there are some that are very much within it. And one of those is actually immigration. Now, I totally accept my right honourable friend, the Prime Minister's comment when he says we do not want to instinctively reach for the lever of uncontrolled immigration. He is absolutely right. This country left the EU to get control of our immigration. However, what we mustn't do is avoid pulling the lever that says where in the shorter term there are real genuine pinch points in the labour market, whereby if we don't act and bring skills in if necessary, we will simply encumber those businesses in a way that may mean many of them may go out of business, and we replace them simply with imports, which in themselves can also be inflationary. The other area is skills, and I was really pleased, this comes to the chair of the Treasury, of the Education Select Committee's point, the importance of skills and the announcement that my right honourable friend had to make about post-16 T-levels, lifelong learning. All of those different announcements he made today, I think, are absolutely vital to repurposing the workforce to get the challenges of the future sorted. In the longer term, there's a huge opportunity for us in this country. We are a world leader in life sciences and fintech and financial services, digital sector. We have opportunities in AI and robotics, in genetics. But if we are going to grasp those opportunities, we have to get up the level of business investment. And I think my right honourable friend referred to that increasing through time, which may be true, but it's still quite a long way below where it ought to be, and historically that's the case. So the super deduction, a very important move that the Chancellor has already made, the extension of the annual investment allowance to 2023, very welcome. But I do think we need to look maybe even deeper at how, beyond the point of the end of the super deduction, we continue to see business investment rise. On R&D, it seems to me amongst the plethora of announcements, figures and dates and different schemes and adjustments to reliefs that my right honourable friend identified, it seems to me within that we may have slipped on our target of, by 2024-25, hitting 22 billion. I think that may, if I heard my right honourable friend correctly, has slipped out to 26-27, and I'm not quite sure where we are on the target that we've had before of 2.4% of GDP by 2027. But those are vital targets for us to meet in the longer term. And the final point I would make, Madam Deputy Speaker, is there must be an overarching examination here of this recovery being balanced. Those that were hit hardest by the pandemic have been the poorest in our society. They were much more likely to be impacted by lockdown and a loss of income, and young people. So my committee will be looking very closely at all the issues that I have raised, including the last point that I have made. But can I once again welcome this budget? The Chancellor has been in a very difficult position. I think he's put forward a very positive set of proposals today. The devil will be in the detail. My committee will look forward to examining that detail, including with my right honourable friend, on Monday of next week. Thank you.